What is going on, Lego investors? So today we are going to talk about an issue that really isn't discussed a whole lot on YouTube channels, and that's simply for the fact that a lot of the YouTubers only present about sets that they've sold and how much money they're making from these sets, and to essentially get views from you to lure you in and continue giving them support. So in essence, they earn more money. But the issue that's not talked about by them is liquidity. Yes, liquidity. Liquidity is a big, big issue when investing in Lego. And this video is primarily for new investors or people that are wanting to start investing in Lego. Liquidity is an absolute problem, and that is the destroyer of a lot of new Lego investors. Simply for the fact that a lot of people come into the Lego investing world because they read an article about how much money you can make if you buy this set and then sell it in 2 years, and how just much money all these YouTubers are making by selling Lego. That is furthest from the truth. Before it was, yes, years ago, that's how it was. But now, it is not that way. So, for example, this article came out in 2023 where it says Lego sets, have proven to be a stable investment over time, appreciating in value, and they're a tangible asset that can easily be bought and sold. And this makes Lego investing relatively low risk investment. So whoever wrote this is absolutely wrong. They are just deceiving you, because this world currently right now for Lego investing is absolutely brutal. We are in a Lego recession. I would almost classify it as a Lego depression, because we have so many new investors, and Lego is they're shooting themselves in the foot with a lot of their decisions, and that is hurting the Lego market. So you have to look at things like the economy, how bad it's doing. When the economy was good a few years ago, yes, people have extra money to invest in Lego, and that's why a lot of Lego sellers did really, really well. The market's now getting worse, and a lot of problems are occurring for Lego investors, and one of them is liquidity. So what does liquidity mean? Liquidity is to convert assets to cash or acquire cash. Selling Lego is a slow process. They are not like stocks. So first off, if you're not investing in a form of retirement, such as a 401k, traditional IRA, a Roth IRA, and have an emergency fund, you should not be investing in Lego. This is a side investment, because stocks are ultimately the best investment you can make. I know a lot of people might disagree with that, but with stocks, you have the ability to liquidate your assets with the click of a button. With Lego, you do not. You have to find a buyer, you have to list those items, and it is a slow and steady process. You are competing against a ton of other people that have the same sets for you, and they might have it cheaper. So you have to hold your inventory for a very long time, and that creates a liquidity problem. So let's say that you buy a house. A house is an asset, and it's not very liquid. Yes, you can take out loans against it and sell it, but those take time. Again, stocks you can liquidate with the click of a button. A house, if you invest in a house, you have to list it. You hire a realtor who does all this. They photograph, listing price, they schedule open houses, negotiate a price, and then sign all the paperwork for you to sell that house. It's not an easy process. And the same thing goes for Lego. It's not easy to liquidate all of your investments if you need to. And I see it all the time. I have witnessed it. I know that I have been a part of this. A lot of new investors come in reading articles like this one, seeing, reading about it and ultimately dreaming about all the money that they'll make, and later on they need to liquidate all of their inventory at a loss. And the only way you can do that fast in the Lego world is finding another investor who will give you like 30 to 40% for what you need. And I don't recommend it ever doing that, because taking a loss is just a big hit. And if you reach out to that person, it shows desperation, and they are going to win in that deal. The next option might be you find a bricks and minifigs. Same thing applies. They are going to say they have overhead, they have employees, they need to make massive profits on what they take in, so they'll probably offer you, 30 to 40% if you're lucky. And there's always a few exceptions. We're talking about just a broad look into this, not a specific set that did amazing. A lot of people that liquidate have sets that aren't retired yet, so that's why they take such massive hits. So you need to understand that if you're investing in Lego, you're looking at years to sell inventory. There's not an easy way like stocks where you can click a button, sell it, and you're good. You pay off your debts, get money for whatever you need, maybe it's rent, whatever the case. It is not that way. And it's extremely difficult to make money nowadays. So, as I said before, Lego has been causing this kind of recession and almost depression in the Lego universe. They have just been outrageously charging prices for a lot of their sets. And they blame it on inflation. But that's not the case. They're earning tons of profit. They make these for extremely cheap, and it ultimately hurts. It makes it harder to sell sets later on, especially if you're buying a set that is way, way overpriced, but you think will do really well. You'll have to hold that set for a very, very long time. And if you buy an expensive set, it's going to be a tough, tough sell. As I always say in all my videos, you need to understand that once you get over that $150, $160 price range, it's hard. It's extremely harder to sell sets. If you're new to investing, you should start out smaller. You should be buying cheaper sets so there's less risk involved. And you need to understand liquidity is an issue. You need to be liquid. You need to have savings. You need to have emergency funds. This should be just a side investment. It should not be your primary investment. And you'll see a lot of the big YouTubers, they'll say that this was their primary investment. And, if you did this years ago, you probably would have been very successful. But nowadays, the market has changed. And we're going to see a ton of Lego investors drop out. And they'll need cash. They'll need to become liquid to cover their debts if they took it out on credit card, which is a common thing when new investors enter the market. You should not be buying sets on credit card if you cannot pay off those credit cards at the end of the month. I see it so many times, and you need to understand that this is just like investing in anything else. There is massive amounts of risk, and as always, I'll try to make videos to make it clear to you about the risks that you may experience and just how the general Lego market is. And when it comes to liquidity, these are not a liquid asset. They are not easy to convert to cash. Again, years ago, you can convert stuff fairly fast, but now we're talking about massive supplies, massive amounts of new investors, and longer hold times. You're looking at years to convert massive amounts of inventory if you're buying massive amounts. So I would love to hear your thoughts and opinion on this. And yeah, please comment down below. But as always, do your own research, have some fun, make some money.
Video is not financial advice. Any statements made are my views and is for entertainment purposes only and should not be taken as financial advice. Do your own research before making any financial investments.